This is our Forex blog for December 20th, 2012. This is a new tool I'm developing for myself for automated trading systems, and it's just absolutely incredible because it measures both the direction that each currency is going and the intensity of direction all in one tool. It's also incredibly fast, and I've found with real-time trading that's also very predictive. In other words, if you have a lot of strength, for instance in the euro here from 3 to 7 o'clock here, and then the pullback phase has less intensity, that trend's very likely to continue. And so you want to buy the strong currencies versus the weak. The euro was quite strong from 3 to about 7, so you want to focus on buying that against either the dollar or yen, or the two main currencies that we trade all the rest of them against. So bringing up a 2-minute chart, and this will work on tick charts, range charts, and other time frame charts too. I just want to highlight this. So 3 o'clock really was when the euro started to show some strength, and as you watch this and you put, you see where the highs are and the lows, you can get a feel for the trend by uptrend having a higher high, lower lows, or higher highs and higher lows. As we scroll forward, we can see what it looks like in real time. Incredible strength right now in the euro, a little bit of weakness in the dollar. If it breaks out over the high, it's very likely to trend. There it does. And notice the darker green means the trend is extremely strong. And as you can see, as it's going up here, it's losing some of its strength. You might have bought this breakout right here at 32.20, and it's really confirmed when it went over the high here. And so you move your stop up underneath the low here, and you get out around 28. You might have only made a little bit on that trade. Now, during the pullback phase right here, you can see the euro has gone slightly strong. The dollar is still weak. Now, this is a 5-minute trend strength of the dollar and the euro. This one shows a 2-minute one. Basically, there's two methods of our entries. One is we look for a pullback, kind of visualize or draw a trend line over the bar's highs, and when it pulls back and it breaks out to the upside, you get long, and the darker the green, the more likely you are to have a win, and the more likely it is to move a lot of pips. If you saw a green bar here, you might wait to see what happens on the next bar. Alright, it breaks out over that bar's high, you're in. The bar is green. You put your stop right underneath the lows here, and you're always aware that it might not break through the highs. Alright, you would expect a darker green bar here. It's not incredibly strong euro. The dollar is not incredibly weak right here. So you move your stop to break even. Alright, it's trying to go higher. And you've locked in, well, not many pips, but 4 or 5 pips. If you want to get out of the trade and then wait for it to break out over the high, if it's the first trade of the day, I would definitely take 3 or 4 pips if I can. I can always buy the 32.35 again, or if it pulls back without much weakness and starts to go back up again, I'll get in again. See? Now here's this low here. I broke that low. That's not a good sign for a long, so I'll be a little bit more cautious. You can see the colors of the bar got less here, and on the 5-minute trend, notice the intensity on the way up, and the pullback has significantly less weakness than the trend strength did. So that's a positive sign. Anytime it goes sideways for a couple bars and breaks out, it's a much higher probability. You can see just very, very little strength in the dollar. Alright, so you might take another stab at this right here around 25, 26, and I'd have a tighter stop here. The key is small losses, big wins, and if it's a very high probability trade, you want to have a wider stop so the noise doesn't get you stopped out. You also don't want to watch this bar by bar. As it goes up, again, notice, not a lot of strength has come into this one yet. So you move your stop up, maybe you only lose 2 or 3 pips if you're wrong here. Alright, notice this is the first bar that really got dark green since we have been in this one. The euro is showing just a little bit more strength. The dollar also upticked. It's possible that the euro dollar's going up, but the dollar's getting strong against other currencies, so that's what this is showing you. Alright, so the next bar, if it takes out over the highs, we have a good shot. Otherwise, I'm moving my stop up underneath this low and locking in a few pips. Now notice it's up by the highs, but it's not really dark green. That's not good. I'm moving my stop up. So we've, locked in maybe 5-6 pips, and I get stopped out here. Again, you can always buy the high again. And this is more of a scalping strategy. This is how I've been trading, and you can trade a lot more lots if you only have a 2 to 3 and 5 pip losses than you can if you have 10 pip losses or 15 or 20 pips. So that's why I like it. And our profit target is the Fibonacci off of this last wave up. So by taking small wins versus possibly getting stopped out with no profit, or worse yet, a loss, you can look for other opportunities in other currencies. As we scroll this over here, you can see the euro, for the most part, has pretty decent or mild strength. The dollar's not weak at all. If you watched the euro New Zealand during this 3:30 to 5 o'clock time frame, you'll see a totally different scenario. For the most part, you buy this little pullback right here, it went up 10. Well, even if you got out right here with pretty much a break even, you have another trade right here that kind of went your way nicely, and the bars got green. It's much higher probability trade than the euro dollar was, and you can see the weakness of the New Zealand's kind of going down here. But as long as you're focusing on the ones that are most strong, the most trendy, you're going to catch a lot of nice trades in this. Now, if you stuck with this and put your stop underneath here, it's going up again. Usually currencies stop at the first or second 1.618 fib target. So our profit target in this is somewhere around 58.50. We have another 13 pips to go. When it's this close to it, usually, and you're in one strong one, another weak one, usually it's going to work its way up there. And there it goes. You're out. You're in this at 20, out pretty much right near 50. You made almost 30 pips on that trade. And that's the nice thing about focusing on the best ones. Now, getting back to the dollar one here, taking a couple small wins, you get into this breakout right here. Notice this is the first really dark green bar. That's wonderful, because the euro's finally having a lot of strength. This is very likely to continue up. So because of that, I'm going to keep my stop a little wider. Instead of moving it up to break even, I'm going to put it right underneath here. We're risking maybe 6 or 7 pips in this instance. Alright, this is the first red bar. The euro is still strong. Remember, this is a 5-minute trend and this is a 2-minute trend. This is typically going to flip to the downside before this one does. You get more false signals on the 2 minutes, just a little early warning system. If you want to move your stop underneath here to make sure you don't lose more than you need to, it's much better to lose 4 or 5 pips than 7 or 8. Much easier to get that back when you're scalping. Alright, this thing's taking off a little bit, but the bars aren't dark green. Alright, took off. Now here's your first fib target. If it inched its way up there and wasn't that green, I'd get out of the whole trade, but I probably would exit half the trade here. Remember, we bought the 35, so we made about 10 pips in the first half. I would move my stop up a little bit. I'm going to give it a little bit of room to go, but it's not likely to go much more above the second fib target, which is probably, I'm estimating, around 32.60. Alright, I'm going to move my stop up underneath here a little bit. You can see this is going up because the euro is very strong, not because the dollar is that weak. At this particular time, from 5 to 6, it looks like the CAD is a much weaker one in real time than the dollar is. You never know what's going to turn into the strongest and weakest ones, but typically strong trends continue and weak trends continue to the downside. There's a reason why we use these fib targets, because most of the time the market stalls between the first and second fib target. Alright, so we probably, I would have been out of this trade at 45 and missed this last little run up here, unfortunately. It is one heck of a strong trend. So as we scroll forward, we now have this move up here. Remember, from 7 to about 8. The dollar gets a little strong. The euro shows a little bit of weakness here. Now the euro is starting to show a little bit of strength as this pulls back. You can kind of watch the euro. If the weakness gets less on the next wave down, look at one wave, two waves, slightly less weakness, the strength, the pullback, you know, if the dollar's in a longer term downtrend, usually any kind of up move will last about an hour to 3 hours max. So this is a little over an hour. That's a decent pullback off the highs. If you draw your fibs on here, you know, looking to buy around the 38 to 50% fib level is usually pretty safe trade. I really like to buy the 50% pullbacks, but if you have a strong uptrend, you can buy the 38%. This one went through it. So instead of just buying at the 38% pullback, if it stalled there and the bars turned green, you would. But right now they're still red, so you don't know if it's going to, you know, continue into a downtrend. All right, it's the first green bar. So one of the things I really liked about this in trading with it live, and you can see this on the chart too, you don't get into trades too early and sit on a loss wondering if the trade's going to work out. I can't tell you how many trades I've personally taken where I was right about the trade and for whatever reason, you know, just got out of the trade with a small 3 to 5, 6, 7 pip loss, and then the trade went 30 pips my way. That makes me furious with myself for chickening out. So I'm always trying to develop more accurate, faster, more responsive tools that don't miss trades but also don't get me in too soon. That's my criteria of what I consider a good tool to trade with, because there's nothing worse than seeing a strong trend. And you can see this really wasn't that strong up, other than this first little move right here and the last little pop. You know, there was a lot of selling on the way up here. So on the way back up, it may or may not break through the high. If it exploded up here with no weakness, you know, in dark green bars, then I would be much more likely to think this will take through the high. But the way it shot up here, I'm going to kind of estimate that it's going to stall up here at the high. Now also keep in mind that this is a basic chart, but we have a lot of tools that really show you where currencies are usually going to reverse. One of them is the containment band. So I like to put the 1.5 and 2 DSP on the chart. I make the white one the 2, and you can add the 3 too. So one of the reasons that this stalled out at this level is because it's above our 2.0 white band, which most of the time, probably 80% of the time, when it gets above this area, it kind of runs out of steam. So knowing that and adding that piece of the pie, you can, when the bars turn red and break down underneath the little sideways range, you can do, you know, relatively high probability counter trend trades somewhere around 60, 63. You made 15 pips on the way down. Now, if this breaks out right here, we're going to go long again. Alright, so we're long, let's just say around 50. As you're watching this bar go up, it would have got super dark green, probably somewhere around 50, 51. So let's just assume we're in this at 51. Our stop is underneath the bar's low. Now this is such a strong trend. We're going to move our stop underneath here, or pretty much near break even. Should shoot up one more time. Remember, 65 is a likely high. We're going to watch this like a hawk. This is going up because of incredible euro strength and just mild dollar weakness. So it's not the best trade in the world. If one's super strong, the other one's super weak, you're probably going to make 20, 30 pips. This one, you know, you moved your stop to break even, which is nice, but you haven't really locked in anything yet. It's at the first containment band, which oftentimes does cause reversal, so it's not the best trade in the world. All right, so it's going up here. I would start to get out of some of my trade because we're not likely to make more than the 5 or 6 more pips. So I'd exit half at 10, 11 pips, and I'm going to move my stop up somewhere in the middle of this bar here. I'm not going to give back much on the second half. Now it's inching its way up. I'm going to move my stop up a little bit because it's not likely to bust through the high because of how it went up before. All right, it did, so we're still in the second half of the trade. Remember, it's very likely to stall up here, and I'm going to redraw my fib targets off of the last wave up to get an idea of where, you know, the smaller the move, the better. So here's a 24 pip swing. Any sign of it stalling up here is probably going to reverse. I'm going to get out. Alright, so I'm out up here at 88. Huge win on the second half of the trade. Got 38 pips on the second half, and I'm not sure where I said we got out of the first half, but let's just assume we made 10 pips on the first half. 10 pips on the first half, 38 pips on the other half, nets 24 pips. So you can see that having small losses of 3, 5, sometimes 7, maximum 10 pips, and catching an occasional 24 pip net win is really going to help you. Now, this is way above the upper band, and more than likely it's even at our 3.0 containment band, which I've found has about a 90% reversal success rate, using the DSP one, which is super fast. So we'll put that on here. If it's at or above that level, we're looking to sell. So it's about 10 pips above that level. Any sign of this green getting lighter green, I'm going to start to look for counter trend trades. Alright, so you can see the bars are getting less green, goes red. I'm going to sell it when because it's only a few pips away. I'm going to sell it when it breaks this low here, just to avoid some unnecessary losses. Sometimes you'll sell it right here, it goes sideways for 5-10 minutes, and then explodes up and you have a loss. Why not just sell it 2-3 pips less and have a much higher winning rate percentage? It's, for me, trading big lots sometimes involves buying insurance, and this is a perfect example of that. If you were in here, you'd have to sit there for 5 minutes wondering what's going to happen. The bar got red here, I'd be short somewhere around 83. And typically, when you're up this much, the markets will pull back 2 waves, so I'll draw my fibs on there. My profit target's somewhere between 68 to 64. But if any sign of this not going down, I'm going to certainly take, might be short, let's just say at 80. We're up 8 pips. Here's the first fib target. I'm out there. I'm going to now yank my profit target on the second half down to around 75. Give a little bit more room to go. And so we get stopped out. Small win on the second half. But that's how you use this tool. And the deeper the pullbacks, the more likely you are to get a continuation pattern. Later in the day, the euro really fell hard, as you can see, but guess where it stalled? Right near the lower fib targets. I mean the lower containment bands, and that's where it started going up again. So these containment bands, especially when you have a strong uptrend before, are very helpful. Let me bring up another chart that the pound was quite strong earlier. Let me make this yellow so when I scroll it back or forward, the other currency meter moves too. Oops. Oh, that's actually another version of our software I have running. It's not linked to this, unfortunately. But you can see at 8 o'clock, let's move this out of the way here. The pound has had mostly strength today, a little bit of weakness. Notice that weakness didn't continue, and at 8 o'clock it starts to have some strength again. The yen at 8 o'clock, had no signs of strength at all, unlike the dollar. So the euro yen and the pound yen coming up to 8 o'clock, both of them very, very likely to have breakouts that are going to give you, 20, 30 pips. You draw your fibs on this last move up, and you're going to have probably a 20, 25 pip profit if it explodes through there. So you're in. Notice it went through the fib target. I always tend to get out of half my trade at the fib target, and then I'll move my stop up, and most of the time get out somewhere at the second fib target. If it shoots through there, that's fine. Any sign of it slowing down, I'm out. And most of the time, markets, probably 95% of the time, don't go and stay above the 2.0 level. They might go 3 to 5 pips above it and then come crashing back down. So this is most of the time where I'm going to get out of my trade. As you can see, didn't go by it even by a pip's worth. So this trade you got in at 90 out of the first half with 24 pips, and we made 10, 20, 30, 40, 50 pips on the second half. Now let me bring up the euro yen on this just to showcase the same thing at 8 o'clock. because the yen was weak, unlike the dollar, you know, the breakouts were very successful. Notice on the way up here, dark green bars. It's in a nice little low volatility pattern like this, and anytime that breaks out, you're very likely for the trade to work. Now again, you have your fib targets off the first wave, and the first time up came real close to here. I just am in the habit of getting out of half. This is a really huge first half. You're up 10, 20, 25 pips or so, and again, the first sign of it running out of steam above there, I'm going to get out. And so when it starts coming back down, I probably would have got out to 0.5 in the second half. Almost 50 pips again on the second half of the trade. So that's how you use our new tools. I think you're going to really love them. FX Trend Intensity and FX Trend Intensity Candle Color.